Hello, welcome everyone. Everyone, today I'm gonna cover the same part, I would say the same lesson which we did in the last class, and I'm gonna complete it here. Like I'll try my best to complete this lesson today, as it is a very long lesson. I would say quite long. So in the last class we have learned about the seven C's. So let's get started from there only. So we have covered all the seven C's in the last class, and let's see this last part as well. That why are the seven C's important? So if I talk about the importance of seven C's, so it gives the the one who lends the money, the lender. It gives the you know the he or the lender is having some kind of surety that whether he should give money to the buyer or the one who is the borrower or not. So lender use the seven C's to decide whether a loan applicant is eligible for credit, okay, and to determine related the interest rate and credit limits. Okay, so the lender use the seven C's to decide whether loan applicant is applicable for the credit or not. They helps to determine the riskiness of a borrower or the likelihood that the loan principal and the interest will be repaid in a full and timely manner. So the one who is the lender, he has a lot of question in his mind. The whether the money which he has given, whether the person to whom he has given, whether he's right or not, whether he'll pay back the money or not. So it's quite risky. Okay, so to avoid those risks, or I would say to mitigate those risks, this is the traditional method. Okay, the 7C is the traditional method which people use in the past time, or nowadays also people use it a lot. That they used to determine whether the person will be able to pay back the money or not. Okay, so that is why it is very important. Okay, to judge with the help of this 7Cs. Let's go. Let's move on to the next topic. What is credit analyst? So, in the last lesson, we have learned what is a credit risk. Now, what is a credit analyst? Analyst, we all can determine the one who analyze, and credit, which we give, okay, the loan, okay. Same here, the credit analyst, it refers to the professional, okay, the financial professional, okay, who assess the credit worthiness of the securities. I have also told you what is credit worthiness. If you wanted to know more about it, do watch my last video, the previous one. So the credit analyst refers to the financial professional who assess the credit worthiness of the securities, individuals, or the companies. Credit analysts determine the likelihood that a borrower can repay their financial obligations by reviewing their financial and credit history. Okay, so I told you this was the first C, character, the credit history. The character, inside the character, we used to check the credit history of that particular person. So credit analyst is the one who checks the credit history and determine whether the state of subject, or I would say the financial health and the economic conditions are favorable to repayment. It should not be like that. Like if suppose if I've given 10 lakh to one of my borrowers, or that person is insolvent, or I would say that person has done something wrong before. So what will happen? So this is quite clear and a crystal clear, I would say, that he will not pay back the money. Okay, so credit analyst is the one who checks the credit history, okay, who checks the economic condition, that whether he will default or he will pay back the money. Okay, let's move on. So credit analyst, what are the key takeaways which you can write down in the exams? And they are very important points that they analyze the investments and borrowers' credit worthiness to determine the potential risk for the investors and lender. It also examines the financial statements. Okay, it also examines the financial statements. The credit analyst, financial statements, we all know, right? The profit and loss, the balance sheets, all these are the financial statements, cash flow. Use ratio analysis. With the help of ratio analysis, we have learned debt to income. Hope you remember the capacity to repay. Capacity to repay in the last lesson only, I told you this. Okay, so credit analysts are typically employed by the commercials and the investment banks. Okay, credit cards issuing institutions, credit rating agencies, and the investment companies. Okay, credit analysts are often called credit risk analysts. This is what the lesson means, or this is what the name of our book. Okay, because credit analysis is specialized area of financial risk analysis. Debt issuers and the instruments are assigned scores based on their letter grade by the credit analyst. So this is also the work of credit analyst. They provide scores. Okay, the issuers of the debt. Okay, so how credit analyst work now? How he or she analyze the things. Okay, for like before giving loan to a borrower. Okay, so credit analysts gather and analyze the financial data associated with the lending. Like they used to check the balance sheet statements, the cash flow statement, all these things, okay, to review the borrower's payment history, okay, history of their payment along with their liabilities. We all know about assets and liabilities. These are very important part. If you are not aware about it, you can watch my video for this as well. I'll let you know more about it. Okay, so here we are talking about liabilities, earning, and assets they possess. Like we used to check their assets, how much assets they have, the liabilities which they have to pay debt, like debts and all those things. The analyst also look for the indicators that the borrower might present a level of risk. Okay, the data are used to recommend the approvals of, or you can say the denial of the credit, and to determine whether to increase or reduce the credit limit, you can say, or charge the additional fee. So this is very, I would say, the most common thing which we all know, like, when we go for the credit card issue also. So there are some points. Okay. So same here, the how credit analysts work, they used to give scores, they used to check the liabilities, earnings, and assets which the borrower have, and they used to check that, the kind of a risk is associated with that. Okay, a key component of their job to interpret the financial statement, to check the financial statement ratios, to analyze the behavior and the history of the potential borrower. Okay. And they used to check the adequate, like whether they have the adequate cash flows by comparing the ratio with the industry data benchmark. Benchmark, you can say, something which is fixed, and we used to compare with that standard. We can give one example also here, that working at a bank may examine an agricultural company financial statement before approving a loan for new farm equipment. Okay, all right. So now employment is offered at a variety of financial institutions, including bank, investment companies, credit unions, credit rating agencies, insurance companies, and assets management company. Analyst who works in securities, okay, the commodity contracts and other financial investments earn the highest salary, you can say. Okay. So we have special considerations. It's not that much important for us. Okay. Yes. So this is the example here. The credit analyst may recommend a solution for an individual who has defaulted on the credit card payment. Like there is a credit card, right? There is a CIBIL score by which we can judge the whether we should give loan to that person or not. So same here, the analyst may recommend their credit limit, like to reduce their credit limit if they are unable to pay back the debt, closing their accounts, or offering them a new credit card with a lower interest rate. Like, we have to pay some interest on the credit card also. Like they do not issue, I would say it's not for free, of course, we can have that. No. So this is something they used to charge for that as well. So same here, the credit analysts play a key role in the well-being of an economy. Okay. They help us only. There are many institutions, I would say the many organization who give scoring. Okay, we'll I'll let you know about it in our further lessons. So credit analysts play a key role in well-being of the economy because credit stimulates the financial activity. Access to credit provides consumer with additional spending power, which helps improve individual lifestyles and give business temporary liquidity. Okay. Now we have credit ratings. I told you, like scores they used to give. Okay, 3-digit number it is. The score is of 3-digit number ranging between 200 to 850, and the most common type of credit score is FICO score. Okay, FICO. Credit score generation is typically automated by the individuals through algorithmic processes. Okay, based on their credit payment history, spendings, and past bankruptcies. Simply, you can say, on the basis of their past behavior, they used to give them scores. Okay, scores, like you can write this also in exam. Scores are like, they will not ask you a separate question in it, but yes, you must have knowledge about it, that the highest score is AAA. Okay, and followed by AA plus, triple B, so on. And the company debt is considered junk or below investment grade once it goes below a credit rating. If our credit rating is less, nobody wants, right? Nobody wants to give, take a loan, isn't it? If let's suppose if I have to give loan, like if I'm, I'm the public one, and if any institution is taking loan, okay, so if they'll ask, or if they'll issue their shares, nobody wants to take it just because their history is not good. Same here. Okay, we have this Moody's and S&P Global. They are very famous for giving rating. They are the credit rating agencies. Okay, they are the international one. In India, we have the CRISIL, CRISIL. Okay, we'll learn about it. So, what skills do we need to be a credit analyst? Okay, the credit analyst, well, the one who analyze the financial statements. Okay, the ledgers, the journal, all those things. Okay, and let's talk about the process, which is very important. Wait. Okay. So the process is quite simple. Okay. So the process is very simple. Let me write it here. The first one process starts from collection. Okay. Maybe my writing will not come good here. Just a second. Okay. Let me highlight it here only. The first step is evaluating a borrower loan application. Okay, we have to evaluate it. First of all, the one who is the credit analyst evaluates the application of the borrower and determine the financial health of the entity and its ability to generate sufficient cash flows. Okay, a lender conduct credit analysis of on potential borrower to determine the credit worthiness and the credit risk associated with that credit to them. Okay, they starts with the, you can say, they start with the determining, evaluating that whether he or she is should get this loan or not, amount of loan. So that is analyzed by the credit analyst. So simple process is very simple. It starts from information collection, okay, evaluating, and then the last one is approval or rejection of their loan. Okay. So if I summarize it in a short and simple words, is the evaluation of the borrower's loan applications to determine if the entity generates enough cash flow to settle its debt obligations. Okay. Credit analysis process collects information from the borrower. I told you already. Analyzing the information provided and at last making a decision on whether or not to approve them. It's very easy. Only three steps are there: collection, analyzing, and making decision. And there are some techniques by which we can do that: ratio analysis, trend analysis, cash flow analysis, projections to determine the credit worthiness of the borrower. Okay, so this we have now, like, the process. It's very lengthy. If I talk about, it's a lengthy one and lasting from a few weeks to a month. It takes, quite long time. The process is very small: collection, then analyzing, and then approval, but it's quite long. See here, the first one, information collection. Here we have to collect all the information, okay, related to borrower. Okay, but this we'll discuss it in the next session. Okay, it's quite long, that is why. All right, I hope you got it. I hope you like my video. Please do like and subscribe to my channel, and please do let me know if you face any issue while reading or while reading my slides while watching this video. I'll try to change something. I'll try to improve myself. Okay, thank you. Bye bye.